Hey there, Dan Martell here, serial entrepreneur, investor, and creator of SaaS Academy. In this episode, I'm going to share with you the difference between deferred revenue versus accrued expenses and really get into the weeds of SaaS accounting. I'm not an accountant. I know I'm wearing an accounting type sweater. Trust me, I'm going to give it to you from the perspective as an entrepreneur, a CEO, a founder, trying to understand all these different terms and how best to set myself up to get the financial reporting that I need to succeed in my business. Be sure to stay at the end. We're going to share with you my precision scorecard framework. Essentially, it's a template that you need to install into your business to be able to track your key metrics on a week, monthly, quarterly basis and hold your team accountable to grow your MRR. Let's get into it. So I'm gonna be honest with you, I didn't want to shoot this video. I didn't think there was a need to shoot this video. I just assumed everybody did accrual accounting until recently I was on a coaching call with all my clients and I found out that probably 15% of my clients were doing cash accounting. And here's what I'm gonna share with you about cash accounting. If you do that, if you run your business from your bank account, which is what most small businesses do, non-software companies, like 90% just run it off their bank account, or at least they look at their bank account to make business decisions. Is there money, etc. It's just hard to make any types of decision around like, what's coming up that I need to pay for? What have I paid for in the past? How's my marketing doing? How's my sales team doing? How has these new initiatives, these new projects that we've built into our business impacting revenue? All these different aspects. There's no visibility when you're doing cash accounting because it's hard to correlate all the different numbers. And that's why they created accrual accounting, and I'm going to walk you through some of the terms that's part of GAAP. If you've seen GAAP accounting, the generally accepted accounting principles, there's different types of, if you're a big company in this vertical or, this industry, you'll have different kind of nuances around how you do it. But the big idea is in SaaS, in software, most of them will use accrual accounting, but you need to understand the terms like deferred revenue to really figure out how to track it properly. Number one, types of accounting. There's two primary types of accounting, accrual and cash. Cash is very simple. If you measure when you got paid or when you owe stuff based on when you pay it or expenses, that's cash. Essentially, you're using your bank account to measure things. Accrual times everything based on the invoice or the service itself on when the expense or the revenue should have been allocated for it. We're gonna dive into it with a bit of story time, but just understand there's two types of accounting, cash and accrual. Most SaaS founders are using accrual and a smaller percentage using cash, but when you start off, maybe that's the easiest way to do it. So no shame, no judgment. I'm just gonna tell you the difference and why at the end you should move over to an accrual accounting process. Number two, story time. Story time, story time, story time. Imagine you have Fire Startup. That's the name of the company. We're just calling it Fire Startup because it's on fire, it's amazing, it's growing. And they invoice a customer on July 1st, but they don't get paid until August 30th, okay? So they invoice July 1st, they don't get paid August 30th. If you're doing cash accounting, then the revenue only comes on August 30th when the money hits the bank account, when he gets paid, right? But with accrual accounting, you would actually account for the revenue on July 1st when the invoice got sent out. That's one of the biggest differences. So I just wanted to share that quick story so that you understand how Fire Startup would look dramatically different if all of a sudden now my income was 60 days different from when it showed up in my bank account, which means, and this is what happens often, is we've got revenue that we're charging for now. We may not see it if it's paid into the future. Or we get people that pay us up front for a big amount. And how do we track that in our accounting? And that's what I want to share with you in this episode. Number three, terms of accounting. I'm going to share with you two terms you probably hear is deferred revenue and accrued expenses, okay? This is a scenario which many of you probably run into. You get a new client, they pay you for a year up front, and you, if you're doing cash accounting, you just like put it in your bank account and you track that revenue. What you want to do is you want to defer the revenue. You almost want to look at it as like they paid you up front, but if you divide it by 12 and you essentially there's an invoice each month that should show up in the bank accounts because that's essentially an accounts payable or a receivable that they're going to pay you into the future every month. That's how you do deferred revenue because you might have gotten revenue this month, but you can't can't take the whole amount in that month. You have to split it up, right? So that's why it's called deferred revenue. So every month you might have new revenue, but then you also have deferred revenues from previous full pays or 2-year contracts or whatever it is from previous months that have to be accounted in your revenues for this month, because a lot of this has to do with taxes, right? When you report revenue is the tax year is when you're going to do it. But I mean, at the end of the day, accrual is key. And then there's accrued expenses. Accrued expenses are expenses that show up in your accounting that you haven't paid for yet. Okay, so they're invoices you haven't paid for, and they usually essentially show up as accounts payable. But it's really important to understand those two big terms because they're going to come up when you're talking to your bookkeeper. Number 4, reporting setup. How do you set up accrual accounting in your accounting software? The good news is if you use Xero or QuickBooks, the default is accrual. You have to actually go into the settings and change it to a cash accounting. But that is how you set up the reporting, is you use a bookkeeping software or accounting software and you make sure it's set up as accrual. And then you need to obviously follow the GAAP standards in regards to how you post things. That's the postings. I've learned more about accounting than I ever wished to learn. I have a full team, a finance team that managed all my different companies and reporting, but I needed to learn this stuff so that I can ask the right questions when I see some discrepancies in some data, some trend lines, etc. But to just set up the foundation, it's usually by default in your accounting software. If you're not using accounting software, add that. Number 5, next step. So here's the deal. That was the high level, the difference between accrual versus cash and deferred revenues and all these different things that you're going to deal with your SaaS business. But I want to encourage you, next step, go hire a bookkeeper that understands accrual accounting. Let them figure it out. And the more you get reports, the more you'll see the difference between cash in your bank account versus the revenue for the previous month or this month or your MRR and how it builds up. And like I said, there's different GAAP, generally accepted accounting practices. And there's some like companies like Zuora that's looking at subscription accounting and how that's done, because that obviously has different nuances. But I just want to share the big thing for most people watching this. You guys are going to get what you need just going to an accrual accounting, hiring a bookkeeper, letting them set up the accounting software, and then just asking for the reports that you're gonna need to run your business and make better decisions. So as I mentioned at the beginning of this episode, I wanna share with you an exclusive resource called the Precision Scorecard. This scorecard is what I use across all my companies on a weekly basis to measure the heartbeat of the business in regards to the accounting stuff that I just went over, as well as sales, marketing, product, etc., customer success. It's all there, all the key metrics. You can download your template below. Just click the link to get access to that. And I have 2 sets of metrics, those for sub $1 million in revenue and those that are $1 million plus in ARR. You can choose which types of metrics are going to best serve you and give you visibility into your business. So just click the link to download your copy of my Precision Scorecard framework. And if you like this video, be sure to smash the subscribe button, leave a comment and let me know if you have any other questions around accrual accounting. I'll do my best. And if there's somebody that you feel like this could serve, feel free to share it with them directly. And as per usual, I want to challenge you to live a bigger life and a bigger business. And I'll see you next Monday. Oh, the accounting. The accounting.